Hello and welcome to another update video about AGIX. Yeah, the AGIX chart is still holding support. We have the orange support area on the chart there. I communicated that to you already a few days ago, maybe even a couple of weeks ago. I can't actually remember, but this support area is our support zone that we can use to track the upside potential on the chart, because a break below it, which is basically the it would be a break below the 50% fib level at 59.2 cents. Well, if we see that, then it would at least make any further upside far less likely, and the entire pattern that we're tracking there to the upside far less reliable. So I'd really like it to avoid breaking below the support zone. Instead, we've already seen a first reaction to it. I shared with you in the previous video, there are different assumptions and different scenarios we're tracking. One of them, as you can see there, labeled in orange wave 5, we could basically top in a 5-wave pattern at any time. The overall chart allows for that, so that would entail a much deeper pullback. However, as long as we're holding above the support zone, we want to give it the benefit of the doubt and want to leave the bulls in control. And yeah, we give the bulls the advantage because it's still a bullish market. We see plenty of other coins currently in a wave 4, and it works, the count works, and it is the first one that's being tested in terms of support. So the support range here for the yellow wave count, which could still give us one more high, easily. That support zone is being tested right now. So there's no point, focusing on something different if that scenario is currently under test. So let's talk about the relevant support levels here and the price structure. In this yellow wave count, we're obviously dealing with a wave 4. Oftentimes a wave 2 and a wave 4 have roughly the same duration in crypto. Now, it's not exact science, but it's something that we can consider something. Now you see here, if we just check roughly and compare, and you see the wave 4 technically, to get it to the same duration as wave 2, could actually spend time in this correction until, well, around the 6th of April. So, I mean, again, it's not exact science, it's just to have the right proportions. So that just means it's not too long to be reliable. It's actually still quite short in duration. And what we need to see is a further upside continuation, obviously, in the 5th wave, and a reaction to the support zone. Now we've had a reaction, but the price is moving in this kind of wedge pattern, which I call a descending broadening wedge. And that's a very messy corrective structure. We can try to label it, but micro counting in corrections is not so helpful, not useful, and also not reliable, because these micro counts tend to change. What's more important than the microstructure is obviously the support area, and that's defined between 59.3 cents and 95.5 cents, with actually an ideal support for the 4th wave at 73.4 cents. That's ideal, okay? It's the entire zone which matters, so the price doesn't need to come down to the ideal level. So if we talk about probabilities, most often the price would gravitate towards here the 38.2 fib level. And as soon as we see a low in place, first of all, as evidence that a low is in place, I need to see a break above the descending trend line, the upper boundary line of that wedge pattern. And also then obviously a break above the 3rd wave high at $1.46. And I think there is upside potential in wave 5, and the next upside targets are on the chart. Next resistances are $1.73, $1.78, $2.17, $3. And looking at the proportions of the chart, oftentimes a wave 5 is as long as wave 1. So we can take the length of the wave 1. And again, I don't have a low in place yet, but if we assume it comes down to 73 cents, then we'd be looking at a first target, around that $1.70 mark, So there's Fibonacci confluence around 170. That at least would complete a 5-wave pattern to the upside technically here from the October low. And then we just need to be on the side of caution. But let's first see if the support area holds. Then we aim for $1.70 next. Not fantastic reward to risk ratio from here, not yet at least. But there is obviously potential for further extensions, okay? So, and then, if we talk about the microstructures, it is always difficult, but at the moment the price doesn't give me anything you know, to work with in terms of, okay, we have already bottomed. That needs to reveal itself first. But I'd say there's a good chance here that this is actually a WXY pattern, WXY. I see that potential on some other crypto charts as well, that these corrections here could morph into something quite complex. But we'll see. And then this here would be an A wave down, B wave up, C wave down. That's sort of an idea. Yeah. This would get invalidated if we get a break above the X wave high at $1.25. That's currently my perspective on the AGIX chart. Best view at the moment that I have. Obviously, it's possible that the wave 4 already bottomed, but then I need to see that break out of the wedge pattern. And either way, you know, somewhere from this region, I would expect, at least in this wave count, a reversal. That's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.